Hey there. BTCI paid me $1,137.48 for the month of January. So in this video, I'm going to cover this month's BTCI distributions for each bucket, compare them with previous month's distributions, and then offer my 5-year-old explanation of what a covered call ETF is. By the way, if we're just meeting, I'm Brad, and I'm on a mission to empower millennials and Gen X to integrate Bitcoin more deeply into their personal finances so they can reach financial independence in 10 years or less. So this is the overall picture of what our holdings look like. As you can see up here, BTCI is paying out $1.04 per share. We have 1,094 shares, which is distributed between our Fidelity taxable brokerage, our Fidelity Roth IRA, and our Fidelity HSA. And these are, sort of the posture that we have each one of these in our taxable brokerage that settles as cash, as well as in our HSA. And then $449 will be reinvested to buy more BTCI inside of our Roth IRA because we're not in the distribution phase there. This is what December 2025 looked like. So it was about $1 a share. We made about 1,080. November was $1.01 per share, almost 1,100 that month. And then the first month that we got into it was October, and that was $1.29 per share. I'm looking forward to the return of those days, which hopefully we'll see a good bit of this year. So total shares owned, 1,094 shares. So that's about the market value of that is about $48,335.99. Our cost basis is a little bit higher, so from an overall cost basis, we're down a little bit because I bought almost all of these shares back in October when the price of the ETF was in the high 50s, close to 60. So again, January income $1137.48. I wanted to talk about this because I get a lot of questions and a lot of pushback from subscribers about, well, why are you doing covered call ETFs? Why not just buy Bitcoin? So just to give you an overall picture of our portfolio, the vast majority of our Bitcoin is in self-custody, on-chain Bitcoin in self-custody. This is basically, the part of our portfolio that's sort of trapped inside of the legacy financial system. And so we are also, we've moved between investment phases. So there are basically kind of two phases of investing. There's the capital growth phase, where you're focused on increasing your net worth, growing your overall nest egg, harnessing Bitcoin's compounded annual growth rate. And then there's the phase that my wife and I have moved into, the income generation phase, where you're focused on, generating income, preserving and growing your overall net worth still. You're using Bitcoin as that sort of nuclear reactor. So I would say the vast majority of you guys that are watching this video, especially those of you that want to be critical of what we're doing, you're probably still in the capital growth phase. So I would recommend, for somebody that's in the capital growth phase, the vast majority of what you would want to focus on is, Bitcoin native investments. Obviously, on-chain Bitcoin in self-custody, maybe some of the ETFs like IBIT. Now, I will also recommend to my clients that are still, they're pursuing financial independence, but they're not there yet, to start doing some micro experiments like what we're doing, so that when you get to financial independence, you don't have this huge learning curve to overcome where you don't know anything about income generation. So that's my 2 cents on that. Morgan Housel talks about in his book, The Psychology of Money, many bets fail because not because they were wrong, but because they were mostly right in a situation that requires things to be exactly right. So it's a really good thing to keep in mind as you're putting together your investment strategy. You want to leave room for error in all of it. So you want to make sure that you're creating a lot of margin. So I wanted to next talk about, what's a covered call ETF? A lot of my audience, a lot of my, clients are new to this concept of a covered call ETF. So I'm going to give you the 5-year-old version, how I would explain it to my 5-year-old. Imagine you have a favorite toy car that you keep in your room. You own the car, it's yours, and you can play with it whenever you want. You make a promise to a friend that if you give me a small candy now, which is a premium, I'll let you borrow the car later, but only if you want it for a price or a strike price we both agree on. And I'll define these terms a little bit more in depth in a few minutes. I'm just kind of setting the table here. That promise is like a call option. You've already got the car. or the asset, so you're covered. You've got, and you get a candy or a premium right away for making that promise. If your friend never wants the car, you keep the candy or the premium and you still have the car. So you're collecting a premium, you get to hold on to that. If your friend decides they really want the car and pays the agreed upon strike price in the future, you give them the car and you still keep the candy or the premium that you got earlier. So a covered call is just you own something, you sell a promise to let someone else buy it later, and you collect a little treat. That is the premium right now. It lets you earn a little bit of extra candy while still having the toy, unless the friend chooses to take it in the future at that agreed upon strike price. By the way, if you're getting value out of this, YouTube tells me that only about 16% of you guys that watch my videos are subscribed. So like, share, subscribe. That really does help out the educational mission of the channel. So a covered call is an option strategy where you own or cover a stock and simultaneously sell an option to sell it in the future on the same holding. So you own the asset, you can deliver it if the option is exercised. You sell the call and you collect the option premium up front. If the asset price stays below the option strike price, or the price that you agreed to sell it in the future, the premium is pure profit. This is a big part of why these covered call ETFs are so profitable, is because a lot of that premium is held back. If the prices rise above the strike, you must sell the asset at the strike because that's the contract that you've signed, keeping the premium but giving up any upside beyond the strike. And this is the argument that a lot of people that are not fans of these, why would I give up the upside of Bitcoin? Well, in our situation, we're not giving up the upside of Bitcoin because the vast majority of our holdings are in on-chain Bitcoin. This is, again, our income generation strategy. This provides extra income, but it limits your gains, ostensibly. The premium, just to get back to the terms, is the price you pay to acquire or write the option itself. So that's that candy that we talked about a minute ago. It's the cost of the contract expressed per share, usually quoted in dollars. Then that strike price is also called the exercise price, and this is a fixed price written into an options contract. So the predetermined price at which the option holder can buy, call, or sell the put and the underlying asset if they exercise the contract. Think of it as a pre-agreed price that doesn't change no matter how high or low the market price goes. If the market price moves past the strike price, the option becomes valuable in the money. If it stays on the other side, the option is less useful or out of the money. So I'm just curious, what do you guys think? Do you understand covered call ETFs? Are you investing in BTCI? Is there anything that I'm missing? I know some of you guys that watch the channel are a little bit more adept at, this covered call ETF strategy than I am. So I always benefit from us as a community sort of coming together and parsing these things out. I wanted to talk for a minute about Bitcoin's volatility, because a lot of people are very critical of Bitcoin's volatility. And I want to just kind of frame it in, backing out and looking at Bitcoin's volatility as an overall structure as an engine of growth. So it's not failure that Bitcoin is volatile. It feels like that in the short term, especially for you guys that, maybe this is your first cycle in Bitcoin and over the last year, you're actually down in your investment. Our encouragement is always to back out, have a longer time preference, at least 4 to 5 years. I think statistically, people that stay in the asset class for at least 4 to 5 years never lose money. So returns and volatility are inseparable. You can't have one without the other. And I'll show you some examples. Cash and bonds have near zero volatility, but by the same token, they have near zero growth. Okay. Equities, you get moderate volatility, and volatility is uncomfortable. I definitely want to acknowledge that. It's even uncomfortable for me. So moderate volatility gives you, upwards of 10 to maybe 20% returns. But Bitcoin is the highest volatility asset, and the potential of that is that 50% compounded annual growth rate that it's had for many of the years of its existence. So volatility is not failure. It's actually a growth engine if you have a long enough time horizon. So the bottom line with BTCI and why we're using this is that it produces income with stability. Okay, so the covered call ETF captures the premium value embedded in Bitcoin's short-term price volatility. So you're selling their BTCI is selling those covered call contracts, collecting that premium. By continuously selling out of the money calls on its Bitcoin holdings, the fund earns high recurring income from options premiums, that candy that we were talking about to the 5-year-old, reduces the effective cost basis, softening downside moves, but it does limit the upside to the chosen strike, which is acceptable for investors who prioritize income over price appreciation. And again, that's where we are in our investment strategy. This part of our portfolio is all about income generation. So again, I wanted to go back to this. The two phases of investing that we've talked about already are that capital growth phase, which I believe most of you guys are probably in. Focusing on your net worth, you're growing your nest egg, you're harnessing that compound annual growth rate for later on. When you cross the Rubicon and you've achieved financial independence, and hopefully before that, you're experimenting with some income generation strategies like this one, where you're focusing on using Bitcoin's volatility as sort of that nuclear reactor while you're still preserving and growing your net worth sort of in the background. The core structure, the covered call overlay on Bitcoin exposure, the underlying asset, BTCI holds Bitcoin-linked exchange-traded products, or ETPs, that track the spot price of Bitcoin. In effect, the fund owns the same amount of Bitcoin that a regular Bitcoin ETF would own. So they own, the same amount as something like IBIT or FBTC would own. But then they have this covered call later. So the fund then writes or sells calls options on those ETP holdings. Because the fund already owns the underlying asset, the calls are covered. If the option is exercised, the entity wants to buy at the agreed strike price, the fund simply delivers the Bitcoin it already holds. Okay. Another Morgan Housel quote that I think is relevant as you're kind of working out where you are in your strategy. Are you, are you in the capital appreciation phase, or are you in the income generation phase, or somewhere in between those? A plan is only useful if it can survive reality. Okay, and a future filled with unknowns is everyone's reality. If there's enough room for error in your savings rate that you can say, it'd be great if the market returns 8% a year over the next 30 years, but if it only does 4% a year, I'll still be okay. The more valuable your plan becomes. So as I'm doing, these live streams, which I'm going live tomorrow. So if you have questions about this, I would love to talk about BTCI during the live stream. I always open it up for a Q&A. But just depending on where you are in your investing process, in your financial process, a lot of you guys that are booking these one-to-one calls, we're going back to a lot of the basics, a lot of the basics of organization, cash flow planning, expense tracking, because without those three elements, you really don't know where you stand. And so I think that, I offer there's a link in the video description below to my free budgeting course. I used to charge $250 for that. I would say the vast majority of the people that I'm doing one-to-one calls with can use some, remedial training around that. So our Thursday live streams, we talk about, general personnel finance, Dave Ramsey style, get out of debt, get organized, get on a budget, that kind of stuff. But we also talk about these FIRE strategies, including preparing for the income generation phase. Obviously, lots to talk about Bitcoin as our high yield savings account, both in self-custody and then all of these adjacent assets that we're doing experiments on, like BTCI, Stretch, and some others that will be coming up. And then I always, if you have questions, it's a great forum to show up and just start asking questions. I can dialogue with you and give a little bit more long form answers around some of these things. A big next step for a lot of our audience that are trying to integrate Bitcoin more personally, more tightly into their personal finances is to get either a Fold debit card or the Gemini Bitcoin MasterCard that allows you to start earning free sats on purchases in other ways, buying gift cards and things like that. So the link is in the video description below for that. And then if you have specific questions or there's something that you're trying to work through, you're like, I'm stuck, or you need a different set of eyes on it, just set up a call. My calls are super reasonable. I'm enjoying connecting with you guys, and I will see you tomorrow. Okay, since you made it this far in the video, I wanted to offer 2 resources that will help you integrate Bitcoin more deeply into your personal finances. Number 1, Gemini's Orange Bitcoin MasterCard. You can earn up to 4% Bitcoin on everyday purchases like gas, dining, groceries, retail purchases. There's no annual fee, no foreign transaction fees, and no exchange fees on any of your rewards. Plus, if you sign up today using my link in the video description below, you get $200 in Bitcoin when you spend $3,000 in your first 90 days. The link is in the description and the comments below. Number 2, I'm also offering one-to-one calls to answer questions and to help you integrate Bitcoin into your personal finances more deeply, including traditional FIRE and Bitcoin planning, as well as Bitcoin self-custody. Link is in the video description below for that.